What's up everybody, it's Prashant here. Whether you're someone who's been investing in the stock market for a while now, or if you're someone new who's just considering getting into it, this video is for you. Regardless of your situation, you are in the right place, and I hope watching this video leaves you with something valuable. Before we get any further into this video, I want to take a second to thank you for being here with me today. I know there are a lot of choices out here on YouTube, and it truly means a lot to me that you're here watching this video. So truly, thank you. Sometimes it's easy for me to assume that everyone believes that investing in the stock market is the correct thing to do, and it's just a no-brainer for everybody. But recently I was thinking back to the days before I started investing in the stock market, and I remember that there were a lot of myths I used to believe in, and that I had a lot of questions in my mind, and I was not sure if investing in the stock market was the correct thing for me. So I decided to make a video here at the end of 2021 where I will go over some of these myths and questions that I had, that I believed in, and hopefully watching this video will help some of you as well. The first myth that I used to believe in is that investing is for rich people only. No, it's for everybody. You can get started with as low as $1 now. Now, if you invest just $1 and never invest anything again, will you become a millionaire? No, but it's a start. The second myth that I used to believe in is that investing is hard. Again, not true. Investing can be hard. If you're trying to put up an iron condor strategy using money that you got from selling puts on another stock, and oh, by the way, you've got $10,000 in margin, yes, investing can be hard. But for most people, investing can be really painfully simple. In fact, I myself was super surprised when I started investing in a very simple manner and started making money from it. The third myth that I used to believe in is that I would get rich by just saving my money, that I had no need to invest my money. In fact, I saved up a lot of my money in the first few years of my career, which I ended up using for my down payment on my first home. I wish I had been investing this money instead over all of these years. Unfortunately, I did not know then what I know now, and I cannot change the past. If I had been investing instead of just saving all of that cash, I would be sitting on a bigger pile of money right now. Let me prove to you why investing is so much better than saving. If you were saving, let's say, $200 every month, in 30 years, you would have saved $72,000. Now, if you are investing those same $200 every month over a period of 30 years, assuming an 8% average rate of return, you would have invested $281,000. This is just a small example to show you the power of investing. If you want to see how much money you will have if you invest it, I would recommend using calculator.net. This is a very simple website where you can make these kinds of calculations for yourself and see how much money you will have if you invest regularly. Okay, I hope that by now I have convinced you that investing in the stock market is right for you. Assuming you're on board with me so far, let us talk about the next steps that you need to take to start investing in 2022. The very first thing that you need to do is to open a brokerage account of some sort. This can be a regular brokerage account or a tax-advantaged one like a 401k or a traditional or Roth IRA. If you want, you can use the links in the description down below to open an account with some of these brokerages, and for some of them you'll get some free stock. I'm not going to get into which one of them is the best, but Vanguard is my personal favorite for the long term. Let's say you're on board with investing in the stock market and you've got your brokerage account set up. The next thing you're going to do is to transfer some money into this account. The easiest way to do this is via an online transfer where you can send money from your checking account directly to your brokerage account. This will take up to 1 to 3 days based on the verification process that your brokerage uses. Alternatively, a lot of brokerages will actually allow you to send a physical check in the mail, but obviously this will take much longer than the online process. Once you've got your money in your brokerage account, it is now time to invest it. And this is where it gets confusing. If you've been following the news over the last 2 years or so, you know that there's a lot of confusing news out there. Stocks, bonds, crypto, inflation, tapering, stimulus, Congress, US debt default, US debt ceiling. There's a lot of news out there and it is confusing. What I'm going to do in this next section of my video is that I'm going to give you a very broad but quick recap of a lot of things that have happened since March of 2020. First up, stocks. Stocks fell off a cliff in March of 2020 when they bottomed out and then boomed, which they continued to do over the next year and a half before finally calming down a little bit and trading sideways over the last 2 to 3 months. US bond yields fell to record lows and stayed there for a long time before finally creeping up again in the last 2 to 3 months as fears of a downturn have crept in again. Inflation stayed low for all of 2020 and the initial few months of 2021 before it started rising. amazing. Now this was expected. We have pumped trillions of dollars of stimulus into the economy, increasing the supply of money, and some inflation was expected. Now, inflation was thought to be the lesser of two evils. It was thought that it is better to overstimulate the economy and have extra inflation rather than have a recession. I agree. Cryptos have been the absolute bonkers asset in all of this. Now, before 2020, a lot of people knew about crypto, especially Bitcoin, but never really cared about it and definitely did not own it. But after the market fell in 2020, and after that, as the market started booming, a lot of people started taking a lot more interest in cryptos. As the supply of money in the economy increased and people found themselves holding more and more cash, they started putting that money into cryptos. I think there are three main reasons for this one. The first one, the novelty, the thrill of getting into something new. The second one, an inflation hedge. As inflation fears came in and people thought that there would be a lot of inflation in the economy, which turned out to be true, people wanted to get into cryptos to be able to beat that inflation. And number three, greed. We've all heard of crypto millionaires, and a lot of people wanted to find something to get rich quick. And that's why they started putting a lot more money into cryptos. And a special note on NFTs. In 2021, this thing came out, and these are called non-fungible tokens or NFTs. These are collectibles that are based on the blockchain, and people are trading them for hundreds, thousands, or even millions of dollars. I personally think that 99% of these NFTs will end up becoming worthless, but for now, at this time, there is money to be made in this space. With all of this euphoria and money printing, it is easy to feel overwhelmed by all of this and think that you've missed the boat and what is even the point now. Or maybe you want to start, but you are confused as to where to begin. On the one hand, people are becoming millionaires by selling JPEGs of monkeys, and on the other hand, CEOs and billionaires are selling their stock and taking in profits. On the one hand, it seems like there is no end to the madness, and on the other hand, inflation numbers are super high and there are signs of a market crash. What do? Look, I'm not here to tell you that I know all of the answers. Nobody does. But when you zoom out and you take emotion out of the picture, this was to be expected. When we print so much extra money, some inflation is to be expected. Bond yields are also behaving as predicted. Outside of cryptos and NFTs, which are newfangled phenomenon, this feels like a typical boom time with sky-high valuations. Now here's the cold hard facts. What goes up must come down. This is true for the stock market as well. Once you realize and accept this as truth, you can take the fear out of it and plan for this eventuality. It is not a question of if, but only a question of when. When you realize this, you can easily plan for this. Unfortunately, you cannot exactly time when the market is going to fail. Nobody can. Sure, after the next market crash, we can all have the benefit of hindsight and we can say, oh yeah, such and such happened and that crashed the market. But don't let anyone convince you they know exactly when that's going to happen before it has happened. We can definitely take some cues from what other people are doing. The stock market has been trading sluggishly over the last 2 or so months, and a lot of companies have given up a lot of their gains. For example, look at Zoom and Tesla. A lot of CEOs and billionaires have also been selling their stock. Look at Elon Musk, Jeff Bezos, or Chamath Palihapitiya have it here. They've been selling their stock and taking in their profit. Now, this could mean that they think the market is near the top and it might have a crash or a correction soon. Or this could simply be end of year tax planning. All this is to say that there is undoubtedly a lot going on in 2022. And 2022 could hold a lot of pain, or it could be an absolute rocket ship. So here's what I'm doing in 2022, and you should consider it too. Over the last few weeks and months, I've been holding cash. Earlier in the year, I was able to max out my Roth IRA to its contribution limit, the $6,000 limit set by the IRS. And by the end of this year, I will have maxed out my 401k to the limit as well, the $19,500 limit, again set by the IRS. But outside of these investments, I have been holding a lot more cash than I usually do. I have not been buying extra stocks for a long time. Sure, I did spend a few $100s on Ethereum, Bitcoin, and Tesla. The sales were too good to pass up. But outside of that, I haven't done any major investing. But this means that I have a little bit extra money saved on the sidelines. As soon as the first of the year comes around, I'm going to get a few $1,000s ready to invest in my brokerage accounts. And I'm going to wait for the first quarter from January to March timeframe and see if there is a market correction that happens, a significant market correction. And by that, I mean 10 to 15%. If I see a 10 to 15% downturn in the market, I'm going to use all of that cash and buy stocks right away. If I don't see this correction by end of March, I'm going to start dollar cost averaging every week and every month. This means that I will take a small amount of that money and use it to buy stocks every week and every month till I run out of that money. As to what to invest in, the thing is everyone's needs and risk tolerance are different. Full disclosure, I'm going to use about 20% of my money and invest in individual companies that I believe in. I will cover that in another video. But I will use 80%, the bulk of those funds, to continue to invest in the S&P 500 index fund. Trust me guys, VOO, Vanguard's S&P 500 index fund, or you can use a Fidelity index fund or some of the others, has been an absolute stunner over the 2020 and 2021 timeframe. And I believe that this will continue to be true over the next 5 years. Even if the market goes down in 2022, I intend to buy more into the S&P 500 at a lower cost basis and then ride the wave back up, beefing up my gains in the process. There are multiple S&P 500 ETFs that I use depending on what I have access to in a specific brokerage. Within my Roth IRA, which I hold with Vanguard, I have access to VOO, Vanguard's S&P 500 index fund, so that's the one I use there. In my 401k, which I have with Principal, I have access to Fidelity funds, so I use Fidelity's S&P 500 index fund, FXAIX. No matter which one you choose, they basically track the same thing and have very, very identical returns. This is an investment that I can stand behind for most investors, whether you're a new investor in this space or you're a seasoned investor who is now thinking maybe it is a time to change tack. I would say that this investment should be adequate for most investors over the next 5, 10, 15, 20 years. And as for cryptos, yes, I do invest in cryptos with a small amount of money. I believe I have about $1,000 invested in cryptos, the majority of which is divided equally between Bitcoin and Ethereum. And I also own some Dogecoin, which I had bought as a joke just before Elon Musk hosted SNL. I have made money on Ethereum and Dogecoin while I've lost money on Bitcoin. I want to reiterate that this is completely fun money for me and I'm completely okay losing this money if that happens. And this is the same boring old advice that I give to everybody who asks me about cryptos. You can invest whatever money you want if you're okay losing it. If you want to put $10,000 in it, make sure that if you lose it all, it does not affect your life adversely. Also, don't invest in NFTs. Those things are too weird. The risk is just not worth it in my opinion. So that's all I have for you guys in today's video. Thank you so much for watching. I hope you found this video useful and interesting, and I hope to see you back on this channel again. Go ahead and smash the like button, subscribe to this channel, and click the bell icon to be notified instantly when I post a new video. Thank you so much for watching, and see you next time.